James Valles, Britain's top banks are set for one of their worst first quarter earnings seasons since the financial crisis, adding to their struggle to win over investors against a backdrop of misconduct charges and weak economic outlook. Despite shoring up their capital bases and paying out strong dividends, the five biggest banks, HSBC, Barclays, Standard Chartered, Lloyds Banking Group, and Royal Bank of Scotland, have collectively seen their shares fall about 11% this year, against a 1.5% rise in the FTSE 100. Most analysts expect earnings to fall at the big five banks, with Barclays, HSBC, and Standard Chartered thought most likely to suffer the biggest hits because of their large investment banking operations.
Banks is extremely tough, and it's tough for a number of reasons. Firstly, as everybody is aware, the operating environment over the course of the first quarter of 2016 has been very, very awkward, particularly the first half of the first quarter. Financial conditions have improved a little bit, but nonetheless the damage was very much done, I suspect, in the period from the 1st of January to about mid-February. Secondly, of course, banks have been reacting to that by cutting their cost bases, letting staff go, and there's a cost associated with that. Thirdly, UK banks have been mired in the mis-selling of product protection insurance, and that has had an adverse effect as well. And then, of course, there is the impact of tighter standards associated with international Basel agreements, which came into force at the beginning of January. So all of this has resulted in quite a marked narrowing in net interest margin, and therefore the banks are set to post a very weak set of numbers over the course of the next few weeks. I suppose investors will be hoping that, given the commitment to dividend payouts, the banks will take the view that this is largely a question or an issue that's now in the past and can be put to bed, but we'll see.
The turmoil in global equities and commodities markets this year made it harder for investment banks to make money in traditional business lines such as trading and advisory. Barclays warned investors this month that its first quarter investment banking earnings were likely to fall. The major U.S. banks have this month set the tone for a dismal quarter, with Goldman Sachs last week joining peers in reporting plunging profits as market volatility hit its bond trading and investment banking businesses. Many British banks are struggling to boost profits, with interest rates at a record low. British bank stocks are also being depressed by political uncertainty, with some investors steering clear of the sector ahead of the June 23rd vote on Britain's membership of the European Union. For the very latest, stay with BNOnews.com and follow us all day long on Twitter for breaking news updates at BNO News.